Hello guys, this is the journal for Monday the 26th of October from verticalspread.com, brought to you by David, also known as the Spread Doctor. Last week I said the market was in a wait and see mode. Well, this week it looks like that wait and see mode has turned into let's lighten our positions while we wait for the stimulus. As you can see from the heat map, it tells a story. It's a sea of red. The equity markets today closed down heavily. The Dow and the Russell were both down by over 2%. The S&P and the Nasdaq were down by over 1.5%, but not quite 2. And the sell-off today is one of those where there are just so many reasons for the market selling off. So there's no need to, as for looking for one catalyst that triggered off the sell-off, well, we have a catalog of reasons that you can choose from. The first one came before the US market opened. It was in the European session. SAP, which is a large cap German tech company, they announced their earnings today for Q3 and they missed the earnings and also guided lower for Q4. Now, when the US market opened, the selling continued. The street, it appears, is trying to figure out if the guide lower for Q4 by SAP, if that represents a macro picture for the large technology cap stocks, the large cap tech stocks, or if the guide lower is just isolated to SAP. Well, needless to say, SAP sold off today was down 23%, and it saw about $35 billion wiped off its market cap. Secondly, the clock seems to be running out for the stimulus bill, and the street is beginning to factor in the likelihood of the stimulus package not being passed before the US elections. And some analysts are going as far as wondering if the package will be passed before January 2021. So many are now saying even after the elections, it's a lame duck session. They might push it out to the budget towards the end of Q1. So that was another reason. The third reason, the COVID-19 infection rates are once again spiking all over the place. So they're spiking across USA and they're spiking across Europe. And this is weighing heavily on the hospitality sector, the travel and leisure sector, and the airline sector, just to mention a few sectors. And finally, over the weekend, China threatened to slap sanctions on some US companies over arms sales to Taiwan. The Chinese Foreign Ministry announced that Lockheed Martin and Boeing will be sanctioned. And this new development didn't help the defense sector today, or indeed help the overall market. So one doesn't need to search for a needle in a haystack to find an explanation for today's sell-off. There are quite a few of them, and collectively explain why the map you see is red. Moving on to the VIX. The VIX spiked today. The VIX spiked as there was a lot of downside protection buying going on. It appears people are buying protection ahead of the US elections and also to hedge against the stimulus disappointment and general uncertainty in the markets. And the VIX was up by 18% to close at 34.26. I had no new trade ideas today. My window of opportunity for selling spreads in the November contracts closed sometime last week. There are now 25 days until the November contract expires. Moving on to my open positions, I have 2 open positions and 1 synthetic position. ARKK, I sold the 110-115 call spread for a credit of $1.04. Let's see where ARKK closed today. So ARKK closed at $97.20, which means my short 110 call is comfortably out of the money and no action is required on this position. I'll review the position on Friday when I review my positions. The second position is in SLV. On this one, I sold the 22.19.5 put spread for a credit of 52 cents. Let's see where SLV closed. SLV closed at 22.61, and yet again my short 22 put is currently out of the money, and again no action is required on this position. I'll review the position on Friday. And finally, my synthetic position in TAN, I didn't get filled in this position. It was selling the 80-85 call spread for a credit of $1.10. TAN closed at $69.63. The short 80 call strike is out of the money as well. No action is required, and I'll cover this position on Friday. Moving on to my watch list, I have got ARKK, BCLI, TAN, and ZM. I'll just quickly go through them. So ARKK, implied volatility is at 54.3. That's why I hit my radar. BCLI is at 92. That's why that one hit my radar as well. TAN 63%, and finally Zoom ZM. ZM is at 51.6. So they all have one thing in common. They all have high implied volatility, and that's my number one criteria for looking for candidates to sell spreads in. That brings me to the end of my journal for today. The main highlight for today is that all the open positions I have are working fine. None of my short strikes has been tested. No action required in terms of adjusting any of the positions, and we'll just leave theta decay to do its thing. Thank you for listening to my journal today. You can leave any questions or comments below, and goodbye. Thanks.